How do you think about Bitcoin when it starts to become less volatile? So obviously everything is kind of crashing against Bitcoin because Bitcoin's price is going up at a pretty insane rate compared to US dollars. If Bitcoin is to eventually reach price stability in US dollar terms, which may or may not happen, but if that was to occur, how do you think about it then being denominated all these other assets?
Yeah, so I think if you look at a lot of things, there's a pretty fantastic chart out there that I don't have on me at the moment, but it's over the last 20 years, the price of everything, from like technology to education to healthcare to consumer goods and the university education, and basically everything that technology has touched is way down. The price of the price of a TV or a semiconductor or just an iPhone. Think about how much an iPhone gives you over the last 10 years. Well, maybe the price has gone up, but the value is gone way up. So actually technology, it's deflationary in the sense that you get more for less. And so when you don't have that expanding, monetary unit, the dollar, expanding money supply that's chasing everything that's becoming more expensive over the last decade or two, it's because more dollars are chasing that. University education, subsidized. Healthcare, subsidized. All of these things that are becoming way more expensive is because essentially the government or just the economy in general is chasing throwing an increasing amount of dollars at it. And so that's why you see these things becoming exponentially more expensive over time. I believe on a Bitcoin standard, on an absolutely scarce monetary standard, global monetary standard, things will gradually decrease in price over time as the money accrues value. Basically, as the world becomes more productive, your money accrues value in everything else. And so I think that's what the future holds, and you won't see these exponential gains that we see over the last decade, and I think over the coming decade. But I think you would expect with human productivity, your purchasing power would increase 1 to 2 to maybe 5% a year, depending on a Bitcoin standard. And I think that's pretty exciting.
When you start to think about how well people understand this, like what's your take on the Jack Dorsey Web3 tweets versus kind of the Web3 pro argument, if you will? Like what do you think?
Yeah, I think I kind of agree with Jack here in the sense that I'm all for the free market, and I'm all for people going and building things and trying things out 100%. But I think a lot of the incentives are skewed in a lot of these, if you want to call it Web3 applications or ecosystems, whether it's with and not that investing is bad in general, right? The argument for a pre-mine is, well, every stock or company is pre-mined, and that's fair. But if we're talking about a company or a security versus an open protocol, I think it's a little bit different, or actually a lot different. And so Bitcoin, crypto kind of gets all lumped into one. And I think it's quite different. We covered it a little bit last week, the differences between, say, Bitcoin and Ethereum. And I'm fine. I'm all for the free market. I don't want regulators to come in and clamp down on these builders or engineers at all. But I think just in terms of, say, an open internet and so-called decentralization, a lot of it's more decentralization theater. And that's fine. I think there's quite a difference between, say, Bitcoin versus what a lot of these other tokens, protocols, Web3 applications are doing. And that's fine, right? But just, saying everything is going to be on a blockchain or creator economy and everyone's going to have their own personal token. It's ambitious. And so we'll see what happens. But, I think the biggest kind of idea in the room is, what Jack thinks, and that's sound money for the world. I think that's the big idea here.